Welcome to Talk Tickers, your direct line into the latest earnings calls. Today we're dissecting the Q2 FY26 earnings from Planet. You know, the company putting eyes in the sky, using AI to make sense of our world.
That's right.
The call was pre-market, September 8th, 2025. And the initial reaction, well, let's just say it was enthusiastic. Explosively so, actually.
Indeed. I mean, what really grabbed attention was that synergy, right? Space tech, AI, and this huge global demand. We saw Planet shares just surge right after the results dropped. A clear sign of a strong beat on key metrics.
Absolutely. That initial read was, well, overwhelmingly positive. But like we often see, even with a great quarter, the market soon started asking questions, specifically about future financing. So for you, our listener, let's unpack this fascinating report. Let's see what really stands out in Planet's story right now.
Sounds good.
All right, let's kick things off. A snapshot of the headline numbers. Q2 FY26 ending July 31st, 2025. They reported revenue of $73.4 million, which wasn't just a record quarter, but also a strong beat against consensus. That's 20% year-over-year growth. Pretty solid.
Very solid.
And on profitability, non-GAAP EPS came in at -3 cents.
Right.
Which beat the street by about 2 cents, so better than expected there too.
And crucially, that non-GAAP gross margin expanded, hit 61%.
61%, wow.
Yeah, up 300 basis points year over year. That expansion, it's not just a number. It really points to strong operational leverage as they scale up. Suggests each new contract is getting, more profitable. It's key for their long-term model.
Okay, so clear beats, strong margin expansion.
Yeah.
But what about the path to actual profitability? That's often the holy grail for these growth companies, isn't it?
You're hitting on maybe the most critical point this quarter. This was their third consecutive quarter of positive adjusted EBITDA.
Third straight.
Came in at $6.4 million.
Yeah.
And adjusted EBITDA, it gives a good read on core earnings power, but maybe even more significantly, their second consecutive quarter of positive free cash flow.
Right.
Hitting $54.3 million year to date. Get this. For the first time ever, they reported positive free cash flow on a rolling 12-month basis.
Hold on, rolling 12-month positive.
Yeah.
That's huge. They'd previously targeted that much further out, hadn't they?
Precisely. Hitting positive FCF ahead of schedule, it fundamentally de-risks the story. It means they're not solely reliant on external cash anymore. Gives them more autonomy, more resilience.
That really is a powerful start to this deep dive. Okay, let's go deeper. What's driving these numbers? What's management seeing? They kept highlighting accelerating demand, particularly from defense and intelligence. Big tailwind there. And you see it directly in their remaining performance obligations, their RPOs,
Yeah.
basically future contracted revenue. Those RPOs swelled to $690.1 million. That's a staggering 516% increase year over year.
516%. And the backlog isn't far behind that, up 245% to $736.1 million.
Yeah.
If you connect the dots, these RPO and backlog figures, they give excellent visibility into future revenue, like way out into fiscal 2027.
Right.
And that strength let management raise the full year FY26 revenue outlook. Now, $281 million to $289 million. A decent bump from before.
That's definitely a confident signal. But their Q3 guidance, it implies some seasonality, right? Revenue is $71 to $74 million.
Yeah.
And adjusted EBITDA potentially dipping slightly, maybe -$4 million to break even. Should we worry about that dip?
Not necessarily, no. Management framed it as reflecting continued investment in growth. Strategic investment, not a demand slowdown.
Ah.
And speaking of investment, they're clearly in a big CapEx cycle, planning $65 to $75 million for the full year. That's to build out the next-gen fleets, Pelican, Tanager, SuperDoves.
Right.
This aggressive spending tells you they're not just confident, they're actively investing to capture this massive opportunity, building capacity for that huge backlog.
Okay, spending to grow into the demand. Makes sense. Now, those contract wins you mentioned, what really stood out on the call?
Well, the scale and the strategic nature of these deals, just look at defense and intelligence, 41% year-over-year revenue growth.
41%.
Yeah. They landed that multi-year, $240 million German-funded satellite services deal. That is monumental. Sovereign access for Germany.
Wow.
Beyond that, NATO's investing in persistent surveillance with them. Expanded deals with the U.S. Navy, the NRO. These aren't just wins. They're like mission-critical endorsements of the tech.
Yeah.
Huge validation.
But it's not just defense, is it? They also mentioned civil government stuff.
Correct.
A 7-figure renewal with the UK Rural Payments Agency for environmental monitoring.
Yeah.
And a new collaboration in Panama. Ministry of Environment, tackling illegal mining, deforestation.
Right.
It really shows that dual-use capability,
Right.
security and sustainability challenge.
Absolutely. I mean, monitoring these global challenges from space, it's never been more vital. And speaking of broad uses, the commercial side, which had been kind of slow, showed a clear inflection point. Grew about 6% year over year. Its first YoE growth in roughly 2 years.
Okay, that is a turnaround for commercial. What drove that? What does it tell us about maybe new markets opening up?
Strength came from agriculture, energy, even insurance.
Yeah.
That Swiss Re example they gave. Drought insurance in Syria, payout of $7.9 million based on Planet's data. That's powerful.
Wow.
It just highlights how their daily scan, their AI solutions are opening totally new markets.
Yeah.
Beyond just government and defense, it's moving from just observing to enabling, direct economic and humanitarian impact.
That Swiss Re example is fascinating, really brings the data down to earth, makes you think, how many other industries could use this?
Oh, absolutely. Urban planning, supply chain logistics, maybe.
Yeah.
Tracking global resources more precisely. The daily high-res coverage enables predictive analytics that, frankly, were impossible just a few years back.
So with all this demand, these huge contracts, how are they actually powering it? Technologically speaking, what's the latest on innovation? How do they stay ahead?
That's the core of their advantage, really. They keep innovating. Just launched 2 new high-res Pelican satellites. Brings the total in orbit to 4. Many more planned for next year. And their Tanager 1 hyperspectral satellite celebrated its 1-year anniversary. It's already spotted methane and CO2 plumes from 3,000 sources globally.
3,000 sources. That's incredibly precise environmental monitoring. Groundbreaking stuff.
It really is.
But it does raise the question, how do they differentiate? It feels like space tech is getting crowded. What's their unique edge beyond just, lots of satellites?
That's critical, yeah. Management really stressed their unique combo, that daily global revisit rate plus sophisticated AI analytics. They argue competitors just can't match that at their scale. It's not just taking pictures, it's processing petabytes daily, delivering actual intelligence.
Right, the processing part.
Exactly. And they highlighted partnerships too, Anthropic, Google, NVIDIA, fine-tuning large language models on satellite images, integrating AI into the satellite hardware. They really see themselves as central to the AI revolution, both upstairs, in space, and downstairs on the ground.
And those satellite services deals, like the German one, seems like a win-win, right? How does that work?
They definitely seem to be. These deals use Planet's existing build plans, so they scale their constellation faster. Customers get sovereign access, dedicated capacity, without the massive cost of building their own satellites.
That's true.
And ultimately, it benefits Planet's entire customer base. More capacity, better revisit rates. It's a neat network effect.
Okay, so let's circle back to that market reaction you mentioned earlier.
Right, the stock jump.
Shares soared about 38% on the call day, hit a 52-week high. That's pure euphoria, basically signaling the market loved the results, the guidance raised, the contracts, validated that whole inflection narrative.
Absolutely, a huge stamp of approval on their execution.
But then a slight pullback, like 3% the next day, after they announced a $300 million convertible notes offering. Quite a whipsaw. What's the story there?
Yeah, it highlights this interesting divergence in sentiment, doesn't it? Management's clearly confident, long-term FCF, that massive backlog, it's all there. But the market immediately wrestled with dilution concerns from those convertible notes.
Right, the convertibles potentially becoming new shares down the line.
Exactly. So while it funds growth, it could spread the company's value over more shares. That spook some investors near term, cause that give back after the big rally. It's this dynamic investors have to weigh, funding growth versus potential dilution.
So Planet's outperforming, margins are expanding, backlog's huge. But funding that growth brings new things to think about. And it seems their focus on big customers, even if it means fewer total customers, is driving higher average revenue per customer. Strong recurring revenue, too. It's a specific kind of growth strategy.
It is, and it's deliberate. Focusing on those larger, stickier government and enterprise contracts gives much better revenue visibility, stability. Especially in a capital-intensive business like this, it de-risks the top line, helps plan capacity, makes sense.
All right, makes sense. Now it's time for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on today's deep dive. And remember, everyone, do your own due diligence.
Okay. Given that post-earnings action, my pitch is a contrarian conversion play.
Ooh, intriguing name.
Right. The initial reaction was ecstatic for all the good reasons we discussed. The beat, the D&I acceleration, hitting positive FCF early, that pullback, maybe 3% on the convertible notes news. Understandable optics about dilution, sure, but it could be a short-lived overreaction.
Okay.
The conversion refers to those notes, yeah. A short-term perceived negative might actually create a buying window. Think about it. They've secured massive multi-year deals. That 240 million German contract gives incredible visibility out to FY27 even. This capital raise, okay, maybe dilutive short-term, but it strategically funds the next-gen fleet expansion, like Pelican. Those new satellites directly enable fulfilling these huge cash-generating contracts. So, my trade idea, go long planet, think 12 to 24 months out.
Longer-term horizon.
Exactly, that dip from the convertible news. Could be a gift. A more attractive entry point. The outrageous part is betting the market quickly looks past the short-term dilution, focusing instead on the accelerated FCF and that preloaded growth from the massive backlog. You're essentially buying into a well-funded, high-growth space AI play, maybe at a temporary discount, betting their daily scan and AI keeps them ahead, letting them convert that backlog into profitable revenue. Management's FY27 confidence is key here.
That is definitely a thought-provoking idea to chew on, and it really captures the tension from this quarter, doesn't it?
It does.
So to recap, strong execution this quarter, big contract wins, hit critical financial milestones early, especially free cash flow.
And connecting it bigger picture, it just underscores how strategically vital Earth observation data fused with AI is becoming. For national security, yes, but also commercial stuff like agriculture, insurance, climate monitoring.
Yeah.
Planet's unique daily global scan plus AI still seems like a key differentiator in grabbing those huge opportunities.
For anyone listening who wants even deeper insights, Planet's hosting an Investor Day, Thursday, October 16th, 2025, in New York City and virtual.
Good to know.
So wrapping up, what stands out to you from this deep dive? And maybe more broadly, how will this accelerating demand for Earth observation and AI geodata reshape things in the years ahead? Decisions, opportunities.
A truly fascinating question to consider as this whole sector keeps evolving so fast. The implications are just enormous.
Indeed they are. Well, that wraps up this deep dive from Talk Tickers. Thanks for tuning in with us. We look forward to bringing you more in-depth analysis from the world of earnings calls very soon.